Good morning, everyone. This is Andrew, and I'm the Communications Director here at the Insurance Department. We're happy that you're joining us for our webinar on insurance for nonprofits and childcare facilities. This and all of our other webinars are available on our YouTube page. We'll have a link to that at the end of the presentation. We will be happy to entertain questions at the end, so if you have any at any time, please feel free to type them into the chat box, and our experts will address them at the end. We have a couple of very special presenters this morning, but before we introduce them, I'd like to turn it over to our Commissioner, DJ Bettencourt.
Well, thank you so much, Andrew, and I really appreciate everybody joining us today for a really important conversation. So I came to the New Hampshire Insurance Department at a very unique time. I came in January of 2021. We were still, of course, working through the COVID pandemic. And then shortly thereafter, we experienced some challenges in our economy. And both of those things created, and we've talked a little bit about this before in previous webinars, but it created a very unique hard market in our insurance markets, not only here in New Hampshire, but across the country. Hard market, as I've described before, is a situation in which demand for traditional insurance coverages is at typical levels, average levels, or higher, but access to that coverage is more narrow. What creates a hard market are the financial strains that are placed on insurance carriers. And that can come from things like supply chain disruptions, which we certainly saw during the COVID pandemic, periods of high inflation, high interest rates, which of course we saw not all that long ago, but also large catastrophic weather losses in which the companies are having to pay out large sums in claims. But nowhere has that hard market hit more deeply than general liability insurance for our nonprofits. And we've obviously focused a lot of time and attention on how to help our nonprofits. New Hampshire, over the course of the last 8 to 9 years, has done a lot to rebuild New Hampshire's behavioral health service structure. The trouble is that while the state has put forward programs and dollars to support those programs, like most states, we as a state contract with nonprofit providers to operationalize and to stand up those programs and bring those services to those who are most in need of them. The consequence, though, is that in order to contract with the state, in order for those nonprofits to be able to partner with the state to operationalize those new behavioral health programs, they need to have that general liability insurance. And that obviously became a huge concern for us at the department. And we began to think very carefully about what we could do to help alleviate some of that trouble. Now, in the last couple of years, we've also become aware that our child and daycare providers are experiencing the same exact struggle. And so what we're left with at this point is an insurance challenge that potentially is undermining two huge policy priorities of the state, both in terms of our governors and in terms of our legislature, to, on the one hand, again, improve New Hampshire's behavioral health system, and on the other hand, ensure that we have adequate workforce and housing and things of that nature to ensure that New Hampshire's economy continues to grow. And the common denominator, as I've mentioned in both of those scenarios, is their struggle to get certain types of insurance coverage. So a couple of years ago, the department launched a data call to try to understand which carriers were still writing this particular line of coverage so that we could at least make a list available to our nonprofits, to our day and child care providers, so that they at least knew who to begin having conversations with to get those critical coverages. The trouble is that despite the fact that there may be some carriers who are still offering that coverage, for a lot of those entities, that coverage remains very unaffordable. And for our small and mid-tier nonprofits, for those small child and daycare providers, those costs are oftentimes something they're unable to bear within their budgets. And so again, we've thought very hard about what we can do as a department to best advise those entities to get the coverages that they need at an affordable price so they can continue to do the great work that they do for the people in our state. And so for this particular webinar, we have invited in two outstanding experts who are going to have a great conversation today about what's going on, what the opportunities are that are available, and then also how to best position yourself as an organization, depending on what you're doing, to be able to not only access coverage, but to access that coverage in a way that is affordable for the organization. So joining us is Joshua Lamberg. He is the CEO and founder of Signers National, a network of premier niche-focused insurance providers. One of those providers is Lamb Insurance Services, which he has also founded. Lamb Insurance is a retail commercial property and casualty brokerage focused exclusively on nonprofit and human service organizations. After graduating from the University of Richmond, Josh had a short professional baseball career that included playing for the Cincinnati Reds minor league organizations. Josh is a man of after my own heart. I'm a big baseball fan myself. So welcome, Josh. And then Michael Lamberg is Lamb Insurance's Service Chief Sales Officer, leading the growth of Signers' retail sales team across the United States. He has been with the company for 12 years and is also an expert in workers' compensation offerings. He previously worked in corporate services at Thomson Reuters and has a bachelor's and master's degree from New York University. So with those introductions, I will turn it over to Josh and Michael.
Commissioner Bettencourt, thank you very much. Got to spend a couple of nights playing at the old National Pride Stadium, New Hampshire, and it's hard for me to shake that experience.
Ullman Stadium is a wonderful place to play a game on a nice summer evening, without a doubt.
We had some terrific nights up there, but nobody showed up to hear me and you talk about great baseball stadiums.
We'll save that for a future webinar.
Thank you very much for having us. Thank you for that nice introduction. So I think without further ado, we'd love to talk to you about how Signers National operates in the marketplace. I think we'll dig a little bit into, how we understand a hard market. Commissioner, I thought you did an excellent job. We've got a couple, 2 slides on kind of oversimplifying how that works. Michael's going to talk in detail about abuse and molestation coverage, what you can do to protect, and then we'll talk about options for insurance buyers and brokers that we can help provide. So Michael.
You can see that?
Yep. So as the commissioner mentioned, my name is Josh Lamberg. I'm the founder of Signers National. Signers is a holding company, and the entities within that are retail insurance brokerage firms, as well as an MGA or a program manager. So the way insurance distribution works, some carriers want to work directly with insurance brokers. Some other carriers want to work through wholesalers or intermediaries. Lamb Insurance Services works with carriers that work directly with a retail broker. Retail brokers work directly with insureds. Now, a program manager, so that's Lamb Insurance Services, you can see on the bottom right. Convello Insurance Group is a program manager. Convello works with a different set of carriers, and Convello works with agents and brokers to provide insurance products that they then provide to their insureds. So, we have a wonderful turnout today. We have some people on this call that may feel their broker is an outstanding relationship, part of their community, and a valued partner. If the information that we provide during today's webinar is helpful, you can take our information, which will be available afterward, and we have slides here, and you can ask your broker to reach out to Convello Insurance Group, and Convello can offer products to your broker. if you're here today and the information we're providing is valuable and you think that we can add value to your organization directly, you can reach out to Michael and reach out to Lamb Insurance, and we can work with you directly. We wanted to make sure that we provide options to make buying insurance in New Hampshire more affordable and more available, no matter what way a consumer in New Hampshire wants to be able to do it. A little more about Signers National. We've got over 15,000 nonprofit and human service clients. We're 800 million in gross written premiums. We've been growing very quickly, and over the last 5 years, we've been in the Inc. 5000. Our client retention rate has been outstanding. We are, as the commissioner said, experts. We believe, just like you'd go to an accountant or a special type of surgeon, insurance is a product. It's not like an automobile. Each policy can be designed differently. So your insurance broker is actually responsible for being the architect of that policy you receive. So we believe in specialty niche insurance where we have expertise. That has our clients have resoundingly enjoyed the benefits of that in pricing and in coverage, and that's reflected in that retention rate. And certainly one of our core values within Signers National is caring, and we believe in being part of the community and giving back to the communities that we operate in. We are the largest insurance broker that specializes exclusively in nonprofit and human service organizations. Last year, we were ranked the 52nd largest privately held insurance broker. We're happy to talk more and more about Signers National and Lamb Insurance Services and Convello, but we want to get into a more educational conversation right now. So let's talk. The commissioner touched on a hard market. We've got a couple of slides here that we like to use as examples of how the hard market has worked. So typically in insurance, and again, of course, this is oversimplified, but for every dollar in losses, represented here as 50 cents, an insurance carrier wants $2 in premium. So for every dollar of premium, half of that premium is going to go to paying losses. And you can see on the right-hand side of the screen here how an insurance company, ideally how they want to operate. Half the dollar spent on losses, you got about a 35% overhead. That's the cost of paying a commission, turning on the lights, reinsurance, taxes. All of that comes up to an 85% of what the industry calls a combined ratio. That combined ratio is claims plus expenses, and that would leave as much as 15% for profit. And you do see some of the industry's best carriers that operate somewhere, in the mid to high 80s is probably the most profitable insurance companies from a combined ratio standpoint. So before we got to the pandemic, this is how generally, in an oversimplified way, this is how the industry was operating. Then we hit the pandemic, and what we saw was a social inflation. We saw claims that had been settling for, a slip and fall, settling for 100,000, starts to settle for 150,000. It was just an avalanche of effect on we saw severe weather storms. We saw, different states opening up the statute of limitations on abuse and molestation claims. There was this just flooding of events that affected losses. And ultimately, if we think about an insurance carrier and we think about transferring risk, right? Each of our organizations pays $1 or pays dollars in premium, and the idea is the insurance company takes on all the risk. So all of these events, statute of limitations for abuse and molestation claims, social inflation, claims that were 50,000 settling for 100, 200, $300,000, severe property claims, all of these events create uncertainty in the insurance market. And as Commissioner said, when you see capital start to leave the insurance market, so you have money that's leaving the insurance market, you have more uncertainty about what will happen in claims, right? If you're in the business of taking on risk for profit, premiums go up. The more uncertainty in the marketplace, the higher you have to charge to be able to try to maintain that same profitability. So in our model here below, as carriers thought claims could be that 50 cents, we see carriers start to estimating a greater overhead cost. You see more litigation, more overhead cost, and what was $1 to get that same 15 cents of profit becomes $1.50. So I'm sure there are people on this webinar that have seen their premium go up 50% over the last 3 or 4 years. I'm sure there's people on this call who say, my premium's gone up by 100%. And any one of these factors may have hit your particular organization, or maybe none of them have. But ultimately, insurance carriers have to create pricing models that affect a broad range of geographies, of states, of different types of risks. So when we see these significantly impactful events hit the industry, you see pricing models go up, and all of this, the people, I would say, if we thought about 6 years ago, there's probably 12 different carriers that were writing nonprofit and human service insurance. And if you ask me today, there 4, 5 is probably a stretch. We're going to call out 4 carriers specifically before we're done that are doing it. But when the commissioner talks about capacity or money going away from part of the industry, that's specifically what he's talking about. Carriers were able to offer products or wanted to offer products, and people say there's a better way for me to invest my money elsewhere. There's a place I can invest it in bonds, or I can invest it in the stock market, or I can invest it in infrastructure, because there's too much uncertainty in the insurance marketplace. So carriers withdraw. That means there's fewer carriers that want that there is to place risk with, and that drives cost up as well. So hopefully that helps everybody further understand this hard market that we still are in. We're starting to see property premiums flatten out a little bit. Things have been going up pretty steadily for the last 3 years. The premiums for property specifically are starting to get a little bit flatter, but the cost of auto liability and excess liability, areas where you can have catastrophic claims in professional liability and abuse and molestation, those areas are still seeing price increases. We're hopeful that this is kind of the top of the market, and we're going to see it come down. But that is hopefully a couple minutes to help you understand, what causes a hard market and how it works. Michael, why don't I hand it to you here, and
Sure.
You can just finish any of the discussion by line, and then get into the abuse and molestation specifically.
Yeah, thanks, Josh. And so great segue into what I wanted to dive into was to look at and Josh started to do a great job of that. What's the current state of the market, right? So we know that we're in a hard market. And again, the factors, one of the things that I want to point out is the factors that have been driving the hard market over the last 5 and beyond years. And very often when I'm talking about the hard market, it really coincides with the COVID pandemic, but a lot of the things that are really driving the issues in the marketplace weren't COVID related, right? So extreme weather events, seeing the escalation of litigation and jury awards, all of those things were happening prior to COVID, but we really started to see a dramatic reaction in the insurance marketplace around the same time that we saw the COVID pandemic start. So that being said, a number of those factors are still in play, and we've got a keen eye on watching them and watching what's happened happening to the insurance marketplace coming out of those events. That being said, as Josh mentioned, we have some good news in the fact that there are signs of market stabilization and slight softening. So in certain areas, certain property types, as Josh already mentioned, we are seeing the market flattening out, and sometimes we're able to see some price decreases specific to property. Workers' comp, which is not mentioned here, has been an area that has been particularly in a good place and soft over a period of time. And to go back to something that Josh was mentioning, if you talk to industry professionals, one of the things that many in the insurance marketplace feel confident about is the ability to really predict and understand what workers' comp losses will look like, right? So because it's predictable, people have confidence in putting their money to work in the workers' comp market. Unfortunately, we are not seeing that in the casualty market. So when I say the casualty market, I define that as general liability, professional liability, abuse and molestation, auto liability, and umbrella and excess liability. So to varying degrees, the casualty marketplace is still it's stabilized to an extent, but it's also in an area, depending upon what type of organization you are or what type of programming you provide, there are varying degrees of hardness that are still out there in the marketplace. So to say another way, the more heavy social service component that you are, so in other words, if you're a foster care and adoption organization, that's still a very, very difficult market, and we still see carriers looking to pull back their exposure to that space. So, we have our pricing, our market outlook. This was from the beginning of the year. Again, a little bit of good news. We've probably seen most of the renewals or new business quotes here on the lower end of this scale for risks that are performing well and risks that are in the light to kind of mid social service type range. As I said, adoption and foster care is still very difficult to place, and we're still seeing significant increases there. So let's move on. Let's jump into talking about abuse and molestation, right? So I wanted to give a little bit of a quick overview. So when we see abuse and molestation coverage, typically for just a general liability policy, the standard general liability form is not designed to cover abuse and molestation. Similarly, professional liability is also designed to exclude or not cover abuse and molestation. So abuse is typically, when we see it covered, whether it's in general liability or professional liability, it's added as a specific endorsement or an addendum to those policies. The other way, and frankly, the best way to find and to ensure abuse and molestation coverage is what we define as having its own separate tower of coverage. So typically, most policies have $1 million per occurrence limit specific to general liability. So ideally, for a social service organization, you want $1 million of general liability, you want $1 million of professional liability, and you want a third tower for $1 million of abuse and molestation. Now, depending upon the scenario, depending upon the marketplace, what your organization does, there are different scenarios that we all have to react to be able to build an insurance program that best fits your organization. So sometimes for certain risks, it makes sense to buy it as an addendum to the general liability or buy it as an addendum to professional liability as opposed to having its own standalone coverage. But I wanted to make sure that everybody understood that there are multiple ways to as we call, build the mousetrap, so to speak. And you really want to make sure that you're working with your broker to get educated enough to make the right decision for your organization. Okay, so let's talk a little bit about who needs abuse and molestation coverage. So any organization that provides services to individuals Often, right, those organizations are providing services to very vulnerable populations. So in settings like shelters, counseling centers, religious organizations, child care facilities, mental health providers, developmentally disabled providers, all of those types of organizations need abuse and molestation coverage. So abuse and molestation coverage, as the name would sound, very often people just think about it as sexual abuse, but it could be physical abuse, mental abuse. There's many different ways that an abuse and molestation policy can step in to defend or provide coverage for your organization if there's an incident, a lawsuit, etc. So, talking a little bit about why abuse is hard to obtain. So there's been a rising frequency and severity of claims. There has been across the country, frankly, definitely in New Hampshire, but across the country, there's been changes in legislation. And those changes in legislation, going back to the earlier comments about understanding and seeing the uncertainty of what claims are going to look like, has dramatically affected insurance carriers and their willingness to cover abuse and molestation. So these changes in legislation, we'll get into this in more detail, but that's had a significant impact on the industry. Also, carrier requirements around risk management. Again, we'll talk more about this later, but protocols, background checks, etc. That has also dramatically lifted the requirements of service providers to be able to get coverage in the marketplace. And then again, reduce carrier appetite as carriers look to reduce their risk. That's not only just in the form of wanting to cover abuse and molestation in and of itself. Sometimes what that looks like is a carrier that was originally willing to give you, umbrella limits up to $5 million is no longer willing to do that. And maybe they won't cover any abuse or molestation in their umbrella whatsoever. That can have a dramatic impact depending upon the size of the organization, right? So if you're a provider that, is working across the entirety of the state, you may want to have higher insurance limits because of the exposure of the organization versus a very small local nonprofit may be more comfortable with just $1 million limit. So that's been another issue that's created problems on the provider side. So we talked about this already. Abuse is offered. It can be offered as a standalone coverage. It can be offered as part of a package policy that has where you have separate towers, and it can also be offered as an addendum to general liability or professional liability.
Michael, do you mind if I add one thing before you move on?
Please go ahead.
So there are 3 types of abuse claims that we like to make sure our operators are aware of. There's what's considered first, second, and third party abuse. First, and the organization can be held responsible for all 3. And we've seen all 3 incidents from anywhere from a child daycare center all the way up to a group home or an adult day rehabilitation center. First party abuse is if an employee is accused of doing something inappropriate with a client. And that's kind of what we typically think of most often. Second party abuse is if you have a third party organization on your premises. An example might be you bring in a contractor to fix a light fixture. And that contractor does something inappropriate or is accused of doing something inappropriate with a consumer while they're in your care, custody, and control. That we don't see many of those claims often. But third-party abuse might be the most frequent. And third-party abuse is consumer to consumer. So we've seen this with children engaging in inappropriate play when they were unsupervised at daycare centers. We've seen it with camp counselors who are over 18 and children who are under 18. We've seen it in organizations that deal with people with, on the developmental disability spectrum, where sometimes 2 people are engaging in something consensual, but they failed to be supervised appropriately. So all three types of actions, your organization is responsible to provide adequate protection to ensure they don't happen. And I'll just really quickly, first party abuse is employee to a consumer. Second party abuse is a third party contractor or somebody else that's on your premises accused of doing something inappropriate. And third party abuse and molestation is consumer to consumer. Okay, all three, a proper abuse and molestation policy will cover you for. And all three, of course, the organization is responsible to protect and do their diligence to prohibit.
Okay, great ad. Thank you. Okay, so I just wanted to very quickly bring up so I talked about the changes in statute of limitations. So really the big thing to point out here, and again, to give the perspective of why has the ability to find this insurance become more difficult. So many states, New Hampshire included, in the 2020-2019 timeframe, were making changes excuse me, to statute of limitations regarding claims related to sex abuse, child sex abuse, etc. So New Hampshire previously had a statute of limitations for child sex abuse, which with a specific age cap of 30 years old, meaning once you reach the age of 30, unless there was some special situation, you weren't able to bring that suit against a provider, etc. So those statute of limitations were totally changed and effectively thrown out. That did a couple things. One is it went back and opened up old claims, or opened up carriers to getting hit with situations that happened 30, 40, 50 years ago. So again, thinking about the certainty of the marketplace and what our claims are going to look like, that had a dramatic impact on carriers. And then as they look forward, carriers have always understood that when you're insuring a human service organization, the terminology that they will use is there's a long tail to coverage, meaning that if a provider is working with children, right? Let's say they're working with 10-year-olds, and they understand, okay, God forbid there was something that were to occur, there could be a suit that can be brought up till those kids are 30 years of age. So there's a long tail of coverage. Well, this legislation essentially said, we're going to take that long tail and we're going to make it so it's even longer, to the point where it's very difficult to underwrite. So that made carriers, again, even more concerned with covering abuse and molestation. Now, one of the things that we tried to do with this presentation is we want to get informational, do a lot of education. One of the things that I'd love to talk about is the difference between an occurrence policy and a claims made policy. It's really important because one of the trends that we've seen is as the market has hardened, and this goes for general liability, professional liability, and abuse and molestation, but it's the way in which insurance policies will respond. And we probably could spend 5 hours walking through occurrence versus claims made. I'm going to try to walk through it in the next 30 seconds to a minute and a half. So I encourage anybody that is either seeing it in your policy or presented when you're going to the marketplace to try and get a quote. If there's a table pounder to walk away with today, one of the things is make sure that you really understand what you're buying, right? Understand if you're buying an occurrence-based policy or a claims-made based policy, understand what you're getting into. Because if you don't and you make a change, you can unknowingly create a potential for a gap in coverage. And when we have a type of exposure that has a really long tail, the last thing that anybody wants is to have some event that happened many years ago come back and bite them many years later. So I'm going to jump into claims made versus occurrence. Okay. So let's first talk about an occurrence-based policy. So occurrence-based policies are the most common policies that we see in the marketplace. So an occurrence policy covers incidents that occurred during the coverage period of the policy. So let's take an example. An example would be, so we're in 2025, and between 24 and 25, our carrier changed, right? So we had ABC carrier in 23, the same carrier in 24. We changed our carrier in 25. But it turns out that this year we were served with a suit that arose from an incident that happened back in 2023. So when you have an occurrence-based policy, the carrier that was on the coverage at the time of the incident is the one that's going to defend your organization for that claim. Right? So you'll note here, ABC carrier was the carrier that was, on the policy during that time. So they're the ones that's going to step in to defend your organization. Now, how's that different from a claims-made policy? So a claims-made policy covers claims that are made during the period of that active policy within a specific date. So an example here would be same incident, right, that occurred in 2023. We receive a lawsuit this year in 2025. Now, our policy has a retro date of January 1 of 2023. So same thing, we changed our carrier from 24 to 25, but because it's a claims-made policy, the carrier that is on the coverage today is going to be the one that responds to the incident that happened back in 2023. Now, just to talk this out a little bit further, one of the things we have to be very careful with claims-made policies. The reason why is this retro date. If we were to switch from a claims-made policy and we were to switch to an occurrence-based policy on the next coverage period, if we don't do some procedural items that are actually going to cost some money to the insured, we could potentially create a gap in coverage such that any incident that we receive a lawsuit on prior to the start of the policy period could go uncovered. And the carrier is going to say, you don't have coverage for that because the retro date is not properly on the policy. So
I can build on that for a second, if that's okay. So this is it is really a critical issue. On the left-hand side, where the incident occurs, that carrier pays it. On the right-hand side of the page, it's where the claim is made. So what if on the right-hand side of the page, I have an incident that occurred in 23, and I have this claims made policy for 25. But then I move to an occurrence policy in 26. But I get a claim and I get sued for something that happened in 23. In that scenario, there is no coverage in place. If you have claims made and move to occurrence, it's possible that you eliminate all of your prior coverage. And without getting too technical, you need to talk with your broker about this, but we have seen this on more than one occasion. If you have claims made coverage and move to occurrence, you can negate all of the coverage that you previously had. That's in trying to accomplish what we want to in an hour. That's what's important, as Michael called it, a table pounder. That's what's important to walk away with. If your new policy is being offered to you on a claims made basis, you should be concerned about that. If any of you are talking to your broker, you should be asking, is the abuse being offered on a claims made basis? Those are questions you should be asking, because we're seeing that in the marketplace. More and more carriers are offering this claims made coverage. And if you leave that carrier, all of the prior coverage can be negated. So as Michael said, we'll pound the table. ask questions about if coverage is provided on a claims-made basis, you should know it is certainly possible that you could be paying for something that could disappear. There are times where there is no other option in the marketplace, and that may be the only way that coverage could be afforded. But if at all possible, you want to avoid this claims-made policy, and you certainly want to try to be aware if somebody is offering it to you. Thanks, Michael.
Thank you. All right, so we talked a little bit before about what carriers are requiring of providers in order to be able to secure abuse and molestation coverage. So I wanted to spend a minute talking about 5 key items that, number one, again, talk to you internally, make sure that you have these things ready to go, because the more prepared you are, and a lot of getting insurance coverage is storytelling, right? It's telling carriers we are going to do whatever is in our power to avoid a bad claim situation. And we're proactive in trying to avoid it. And then God forbid that something happens, we're all over the incident so that we make sure that we get the best possible outcome. And the better prepared you are to tell that story to carriers, the better outcome you will get when it's trying to secure coverage, trying to renew coverage, etc. So really, really important. So to jump to just what are these 5 items? 1, abuse and molestation prevention training. So make sure that you have written documentation that you can show to carriers, this is what we're walking through with our employees on an annual basis to make sure that everybody is well aware of abuse and molestation, how to look for it, what are warning signs, what are patterns of abusers, how do we properly report things, what are risk reduction procedures, etc. Second thing, screening, criminal background checks, reference checks, and interviews for your employees. This is one that we've seen some organizations that, you've had employees, you're a local community organization and you haven't done some of these things in the past. This is something that it's in order to get abuse and molestation, carriers want to see that you're doing this stuff. Policies and procedures, making sure that there's a signed acknowledgement, including obligation to report, a response plan if there is an incident that happens within the organization. Really, really important. I highly encourage anybody, any provider, number one, talk to your broker if you don't have this stuff in place about helping. They should be able to help you get it in place. If not your broker should be able to facilitate that with your insurance carrier. Many insurance carriers want to provide additional resources to help their insureds because it helps those carriers avoid claims, right? So carriers will lean into this and help you out, as will the brokerage community. Monitoring and oversight, right? Understanding from the management of the organization, making sure that you can show we do periodic reviews, we do documentation of training, and any accusations, we have very good written documentation, and also performance reviews. And last, making sure that there is mandatory reporting and investigation for any incidents. You have, well-aligned incident forms, follow-ups, etc. Okay. This is just a highlight of, this is Abuse Prevention Systems is an organization. It's a third party. Many carriers partner with Abuse Prevention Systems to provide abuse awareness training, a screening process, background checks. So I just wanted to highlight, here's 4 carriers that we work with that are very common across the brokerage community, some of which provide this free of cost. Others will provide discounted subscriptions to be able to get this if you don't already have something internal at your organization. We talked about the insurance marketplace. It's paramount to make sure that you're working with the right partners. And the right partners, whether it be the right broker, or if you're working with the right broker, making sure that they're working with the right carriers that can offer the coverage that you need. So with that, Josh, I'm going to kick it back to you to close us out.
Thank you. We're going to wrap this up very quickly. What we hope you learned today was a little bit of an understanding of what creates this hard market. We hope we gave you a little bit of insight into this abuse and molestation coverage, how it can be offered in a policy within the general liability or separately, what first, second, and third party abuse and molestation is, how and some ideas on how to prevent. We started, and I'll end with, we are specialists in insuring nonprofit and human service organizations. It's what Michael and I, who are brothers, what we get up every day to do. We have different ways. There are insurers that are offering this coverage in the state of New Hampshire. Michael mentioned some of them: Church Mutual, AmTrust, Fortegra, and Philadelphia insurance companies. Some of those are exclusively offered through Convello, and Convello can be accessed through your broker or directly through Lamb Insurance Services. So if the story you're hearing is this is not available, I'm telling you that you're probably dealing with somebody that does not have enough expertise to insure your organization. These coverages are available in the state of New Hampshire, and we can work with you directly if you'd like help in that matter, and we can work with your broker if you'd like us to help in that manner. But this coverage is available, and we'd love to help in any way that we can. So, Commissioner Bettencourt, thank you very much for the opportunity to speak and hopefully educate here today. We really appreciate the opportunity to speak with the state of New Hampshire.
Well, I can't thank you two gentlemen enough. This has been a phenomenal presentation that gives a background as to the conditions that have brought about the challenges that our nonprofits and our day and child care providers are seeing. There are a lot of them who have joined the presentation today. As we do with all of our webinars, this is being recorded. So if you are a behavioral health provider or nonprofit that is on the webinar right now, please share this recording with your colleagues who are also struggling, or with any entity that you know that is going through the challenge of trying to find these important coverages. I really appreciated as well the practical advice that you've given out today, because we hear that often from the entities that are impacted. What can we do? Commissioner, we appreciate the work the department has done to put a list together of carriers that are still offering this coverage, but what can we do to best position ourselves to get offered terms that work within our budget, that do not overwhelm our financial situation as an organization? And you've done that, obviously, as well. Two key highlights, and I'm stalling a little bit for time because I'm sure that there are individuals who have joined us today who have questions. If you do have questions, I think Andrew hit on this at the top of the program, do type them into the chat function as part of this event, and we'll answer that question, either myself or one of the two subject matter experts that we have here this morning. But you heard Michael talk a little bit about profitability. And one of the things that I hear from consumers all the time is a great frustration that they're not able to access the coverages that they need. And we try to explain the financial strain that the carriers are under, given this particularly unique hard market. And they say, well, I understand that, Commissioner, but I also saw that X, Y, and Z company made X number of million or $1 billion last year. So they're still making money, but they're raising my premiums, or they're not offering me coverage anymore. There's an important aspect to this to understand. And I'm not going to tell you that All of the insurance carriers operating in this country have very good public relations, or that they do a good enough job explaining why they're having to take the steps that they are to either restrict the lines of business that they write or to have to increase premiums on consumers. But one of the things beyond profitability that's important to bear in mind is that every state across this country, and we've tried to make some of these standards uniform, but every state across this country has a set of regulations and expectations of these companies as it pertains to their financial health, as it pertains to their solvency. And so they have to have a certain amount of reserves based on the type of insurance that they are writing, that they are offering. They have to have a certain amount of reserves based on their investments, their overall health. And so, because of those expectations, again, they have to create an environment where they are obviously profitable. That's how they stay in business, but also meeting those state benchmarks in terms of what we look at to see they have essentially in their bank accounts for us to deem them to be financially healthy and stable, so that we can ensure that they have what they need to pay claims. Because at the end of the day, all of the other issues impacting an insurance company fall to the wayside if they don't have the resources to actually pay claims for that consumer. So in addition to profitability being a concern for those carriers in this hard market, it's also important to understand the solvency expectations that state regulators across this country have for them as well. You know, the other thing I'll mention too, because I hear this often, is there are nonprofits, and again, those child and daycare providers who come to me and say, you know, Commissioner, I appreciate that there have been some terrible things that have happened in this state. There have been some terrible things that have happened in this country. We want the victims of those terrible incidents to get justice and to get made financially whole. But, you know, Commissioner, that's not anything that we would ever do. And we've not had any claim like that. And we've been in business for 10, 15, 20, 25 years. So why are those incidents of the past, those terrible abuse and molestation incidents, impacting me when we would never do those things? Well, two things to remember. While you as an organization may never do those things, that is not to prevent somebody from potentially bringing forward an allegation. Whether that allegation has merit or does not have merit, they are all treated the same. And again, there's an expense associated with that as it pertains to your insurance coverage. And the other thing, I think either Michael or Joshua hit on this very, very well. While it is absolutely true that the vast, vast majority of behavioral health nonprofits and child and daycare providers do not have allegations or instances of abuse or molestation, when those claims do occur and when they are legitimate, the claims that have to be paid out are unbelievably expensive, understandably so, again, to make those victims whole and to ensure that they've achieved justice. But also, as was mentioned, the tails on those claims, which is to say the period of time that stretches back as to when that behavior first occurred, can go back decades and decades and decades. And the two examples that I cite all the time, and I'm not picking on these organizations, but they've been so high profile, I think it helps people to understand. We're talking about things like the Catholic Church, like the Boy Scouts of America. Locally here in New Hampshire, we're talking about the awful incident that we saw over at the Youth Detention Center that obviously has made headlines recently. Those are the types of claims that we're talking about. And again, what has to be paid out, understandably and rightly so, is large, large sums of money. And again, the individuals impacted within periods of time can go back decades and decades. And so unfortunately, the sins of those bad actors and the sins of those bad actors from many, many, many years ago, unfortunately, can be visited upon entities that had nothing to do with that conduct and would never in a million years think to engage in that type of conduct but yet because the market is so interconnected, it has an impact on you. But both Michael and Joshua have done a great job in offering some practical advice and solutions as to what you can do when you're having a conversation with a carrier about the protective steps that you've taken, the nature of the work that you do, and all of that can be very, very helpful in getting terms offered to you that deal with the type of coverage that you need, but also are able to give you coverage at a price that you can afford. And so again, here in New Hampshire, a lot of this has really come to the surface because of the work that we've done here in New Hampshire in the behavioral health space, whether that be mental health or substance use disorder, bringing programs forward, putting dollars behind those efforts. But if we cannot find partners, those nonprofit partners, to operationalize those programs, we're not making the type of progress that we want to see. So hopefully some of those organizations that are interested in partnering with New Hampshire to bring these services online either are with us today or catch this webinar at a later period, and again, better position them to be able to get the coverages they need to partner with the state and bring those forward. And then, of course, we've got our day and childcare providers, a critical group of people who are helping New Hampshire to ensure that we have workforce that we need. Obviously, parents need somewhere for their kids to go and to be taken care of as they seek to re-enter the workforce. And so obviously we want to make sure that those entities that are helping New Hampshire's overall economy have the coverages that they need as well. So phenomenal presentation this morning, one of our best ones yet, really. So at this point, I'll turn to Andrew. Do we have any questions that have come in from the audience?
Yeah, Commissioner, we have some comments and a couple of questions.
Great.
Looking through the chat here, someone asks, have you worked with Markle? That seems to be a coverage offered to most childcare centers. What about Andover companies?
So Markel has been really withdrawing from the marketplace. They were on a lot of childcare centers, but we've really seen them leave the human service arena. Andover, I am familiar with the company. I would not say that we would target them as a carrier. So you not only, ideally, you don't want to find a carrier that can do this. You want to find a carrier that is actively seeking these types of risks, human service types of risks. So Andover is not a carrier that we typically see as seeking daycare centers or human service organizations that handle, that take individuals into their care, custody, and control, all for professional liability and abuse molestation. I would say those would not be carriers that we target.
Thank you, Joshua. There's another question that may be directed to the commissioner. Steve asks, why doesn't New Hampshire reinstate a statute of limitations? Commissioner Bettencourt, are you still with us?
Apologies there, Andrew. Had a little bit of a network disruption there. I'm sorry. What was the question?
The question is, why doesn't New Hampshire reinstate a statute of limitations?
Well, that's a question for the legislature to answer. Again, I think that given some of the high-profile incidents that I had referenced before, there was a lot of sentiment to ensure that the state was providing extra protections for victims to be able to come forward to get the justice that they're entitled to. But again, I think as both Michael and Joshua have explained, there's a balancing act there, because what you don't want is to create an environment where you're obviously trying to do everything you can to ensure the victims of that horrific conduct are, again, being made whole in getting justice insofar as they can attain that justice given the situation, while at the same time not creating an environment where your nonprofits in the behavioral health space and your child and daycare centers are no longer able to get the coverages that they need or afford the coverages that they need to provide vital services to the people of New Hampshire. And so achieving that balancing act can be incredibly difficult and tricky sometimes. And we've had this conversation with the legislature on a couple of occasions, and I think they're really thinking through carefully how to, again, best attain that proper balance. So apologies there for a little internet connectivity snafu, but hopefully that answers the question.
Commissioner, it might also be worth sharing. And I'm not, in many states, the statute of limitations used to be 3 years after somebody turned 21. By the time they were 24, they could no longer submit a claim for an abuse that would have happened while they were a child. As you know, we've all, as a society, we go forward and we know that the human brain doesn't stop maturing until we're 27. Saying that the statute of limitations, you know, for decades, after 24, you no longer had the opportunity. So I think we've seen a lot of states, you know, swing that pendulum and open up a larger statute to give people the opportunity as they mature and reconcile some terrible things that happened to them as children. So we now have this pendulum that's kind of pretty far back. I don't know that 3 years after, it's, you know, that is what legislature is for, to figure out where the right answer is. But it's worth noting that for the recent history, you had until you're 24. If you didn't report it by that time, you know, you no longer had an option to say, this happened to me and I deserve some type of restitution.
Joshua, that's a really, really good point. And I think you're spot on there, because I'm no mental health expert. I have zero experience in advising people who have gone through the types of trauma that we're talking about here and that we've seen in the past. But to your point, there are times when that individual needs a period of time to process what's happened to them, understand what's happened to them, and then have the courage to come forward and say, this happened to me and I'm deserving of justice. And we never want to close the door on those individuals. And so to your point, Josh, I don't know exactly what the right period of time is, but I think that there's plenty of opportunity to work with mental health specialists, with trauma specialists, to find out when that appropriate period of time is for those individuals to be able to have that, as I've said, that time to process, that time to come to grips with that trauma that occurred to them, and then find the courage to come forward and talk about that. What I do see as being unhelpful, however, and I've not seen it in New Hampshire, but I have seen it in other states that has caused the problem that we've talked about here this morning to be even worse in those states, are some of these law firms that openly and actively advertise and welcome people to join their lawsuits, in which case you may end up encouraging some people who were not impacted to come forward and to bring forward costly litigation that is not justified. So again, all of it is a balancing act in trying to weigh a number of very, very important principles in just such a way, again, that you're achieving justice for individuals who have been horribly treated and suffered terrible trauma, while at the same time not completely upending or significantly damaging a critical insurance market that so many of these important entities need in order to operate and offer the important services that they do to the public.
Well said.
Answer other questions.
Really just two other things. They're both comments. There's some support in the comments for convening a meeting with childcare programs to see how we can best mitigate the risks together. And then I guess I'll close my portion of this by saying, you know, the insurance department always encourages people to shop around, and there are a number of agent producers in the comments, so we encourage folks to take their information down and do their due diligence when looking for coverage here. We appreciate everyone who joined us this month. And again, this and all of our other webinars are going to appear on our YouTube page, so you can tune in there. We have different topics every month, and we appreciate everyone joining very much. Any closing thoughts, Commissioner?
No, again, I really appreciate the discussion this morning. I appreciate the number of people who have come out. Incredibly, incredibly important discussion. Any meetings that any of the entities that are impacted by this morning's discussion that want to have a meeting, to the extent that myself or a member of our team can be helpful in ensuring that meeting is productive, don't ever hesitate to let us know. I've done it before. I'm happy to do it again. But, the reason, and this is where I'll conclude, the reason that we do these webinars is twofold. As you know, at the core of our department's mission is consumer protection. And I personally, as commissioner, do not believe that we are living up to that core mission if we're not doing everything that we can to let the public know that the department exists. This is what we do. This is how we can help you. But very closely related to that is, it is important to me that the public knows the resources that are available to them as they seek the best insurance coverages, whether it be for themselves, for their families, for their organization, for their businesses, whatever the case may be. And so we've obviously this morning brought forward two subject matter experts who can be phenomenal resources to you. And so we strongly encourage you to take advantage of the sources of information, the support that is out there, again, to help you get the coverages that you need at a cost that you can afford. And so hopefully, and I'm confident that this morning's discussion has advanced both of those goals, and we really appreciate it. Joshua, Michael, can't thank you enough. Really, really appreciate both of you. Thank you.
Thank you.
Thank you so much for the opportunity, Commissioner.
All right, be well, and we will see everyone next month. Thanks so much.